Well, guys, it looks like Wall Street is finally getting behind Tesla stock, and that is fueling this epic run that we've had over the past couple of weeks. But why is Wall Street suddenly behind Tesla again? And are they setting us up for something a lot bigger in the future? So let's get you guys real answers to that today. Just make sure you like the video if you like getting the truth without the hype. So yep, Wall Street's at it again, guys. We know that. And let's take a look at exactly what they're telling us, exactly why it's good and why it's bad. And we'll kind of break it all down right here for you guys. So that way you guys have the truth and you don't get caught up in something you don't want to be caught in. And yes, those couple of you folks that emailed me asking for an extension on the sale for my group, I just haven't taken it down yet. So if you happen to watch this video, you happen to jump on, I might not have taken it down yet. So go and check it out there and take advantage. All right, so let's jump into the video here and see what they got to say.
Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Megan Brantley. She's the Vice President of Research at Lightfolio. Welcome back to the show, Megan.
Thanks for having me, guys.
Happy Friday to you. Tesla, happy July for Tesla investors. This stock's up 26%. You know, it was left for dead about a month ago, 2 months ago, Megan. What kind of data are you guys seeing? Because this is a high beta name that just whips around, it seems like.
Yeah, so, we know we've been tracking Tesla and we've been bullish Tesla for a long time. I feel like we talk with this about you guys a lot, and the fact that we see EVs having reached a tipping point, and we now are looking at Tesla, and I think that this is really important. And it's a question that investors have to ask themselves is, do you see Tesla as merely a car company, or do you see Tesla as a major disruptor beyond just cars and also into AI and robotics and things like that? And we see the...
Okay, so let's kind of address right there up front. This is some of the problems that I have with the bulls on Tesla stock. I've never really heard of this particular group before, so I don't know if they're trying to copy the ARK Invest model or not. Take that for what you will. But he asked very specifically, hey, it was left for dead. Now it's on an epic run. What exactly is the data that you're seeing that's driving that? You know, basically what's happened there. Now, I can tell you guys up front, the answer is nothing. There's been nothing. We've had no earnings releases. There's been no update to guidance. There's been nothing like that outside of a delay in the robotaxi event that's coming. It's pretty much it in regards to that. So there's no actual data. So immediately she jumps to a question that, again, we don't have actual data for yet. Do you view it as more of a car company? Or do you view it as more of an AI, robotics, all these other future things in the future there? But again, the question was about data and driving this run. And you see immediately how they basically ignore the question, jump straight to the bullet points that we've all heard and never really circle back to the actual data question there. So that's something right there that, and I'm not saying I'm not bullish on those things or anything else like that, but when I'm listening to bulls talk, and I'm looking for something tangible to say, hey, yeah, what is really driving this here? Is it valuation? Is it, some sort of a guidance increase? Whatever the case is, and somebody points to something that's, 2 years, 5 years, 10 years into the future as the reason for a move right now, I kind of know there's not a whole lot driving it right there. Even from a bull's perspective, there's nothing that they can lean on to say, yeah, this is the actual reason for the move there. So I just kind of wanted to give that to you guys as a little bit of something when you're hearing a bull talk about it, whether it's on YouTube, CNBC, whatever the case is. If you're not hearing something tangible when it comes to that, and they immediately jump to something that's years into the future, maybe even decades into the future, that right there is kind of not necessarily a red flag, but you just know, hey, there's nothing right now that's going on that's driving the particular move. It's something else, and we'll get into that, what that something else is here in just a minute.
So this is a name that when we look at this, we see a lot of potential levers and drivers that Elon Musk can pull to make this company even more profitable and powerful than it already is. I think whenever we look at this just from a pure car perspective first, when we look at visits to Tesla's website, those are up by about 6% year over year and up by about 36% on a 2-year stack. So we see sustained consumer interest as a little bit of a slowdown in growth, to be fair, but we see a nice 2-year growth range, and just that sustaining, consumers coming to check out their vehicles, check out the cars and availability. And just to give scale, Ford, in contrast, is down 15% on a 2-year stack. So a little bit of diverging, just long-term stories whenever you talk about the vehicle that is capturing the mind of the consumer. And
okay, I have to stop it right there. I can't take any more. I cannot stand when folks who are discussing Tesla specifically and talking about, hey, she said, I'm going to view it just as a pure car company. Okay, then let's talk about a pure car company. And the only data point she gives is website visits. Cool. I mean, what's the context here for that? In regards to, is it, if you're going to value it as a pure car company, no analyst is sitting out there going, well, Tesla visits are up this month on their website. Let's definitely add, another 500 billion to the valuation of the stock. That's not happening, guys. I would suspect and I would hope that considering, one of the only ways you can buy a Tesla is through the website, because you can't go to a dealership, that they absolutely would be outperforming everybody else in regards to that data, even though they actually showed it's actually down. Let's see here. Yeah, over the past 2 years, it's actually down. So that for me, in terms of from a vehicle, and if I'm going to use that as the sole predictor of what Tesla's doing, or as a major predictor of what Tesla's doing, it's down over the past 2 years, not up, despite the fact that obviously deliveries are much higher than they were 2 years ago and everything else. I understand they're down year over year, but 2 years ago, they were actually, obviously deliveries are a lot more now than they were back then, but yet here we are, the website traffic's down. So it's a terrible, terrible metric. And this is stuff that when somebody doesn't have a good reason for something and there's not a tangible financial reason, investor reason to go for it, they stretch on things of that nature. I've never heard of an investor ever outside of on, things like this, Google searches are up for, I don't know, take your stock, NVIDIA. So NVIDIA must be a buy. Like, no, NVIDIA's crushing freaking earnings quarter in and quarter out. Nobody cares who's searching NVIDIA and who's not. Just doesn't matter, because earnings is what matters. So these are the type things that just drive me bonkers. And unfortunately, it's been pitched to you guys as retail investors as important when it's not important at all. Can it be something that maybe gives you a touch of an insight into something, or maybe a touch into a trend? Kind of, but they're very, very, very cursory. And when that's your go-to for, let me talk about Tesla from the automotive perspective, and you don't talk about anything else in regards to the automotive perspective, the only thing you talk about is, website visits. I don't know, unless you're a pure website-based company, like your Shopify store or something. I don't know. These are just the kind of things that just drive me nuts. And more importantly, this is my concern for you guys out there as investors, is it's a distraction from what's important in regards to Tesla. And I agree with the future things are important as well, but I care more about progress in regards to those future things, not website visits and not website searches in regards to those future things.
Also, when we look at just overall levels of consumer mind share, so for all four of these competitors, when we talk about Tesla, Rivian, Ford, GM, and all of their respective brands that fall under their umbrella, Tesla commands about 62% of consumer mind share. So for us, this tells us that consumers are still very interested in Tesla and Tesla vehicles. And perhaps maybe the market isn't thinking long term as we are whenever we look at a name like Tesla.
And the market never thinks long term. But either way, not reviewing the search website, I don't know. Anyways, you guys know what I'm saying. That's nothing to do with long term. If I'm thinking long term there, the long term trend is down. So Tesla's got problems too. And I don't think that's true at all. But using her logic there, kind of says that it is.
Megan, this is kind of a tricky time in Tesla's history, because you've got new products coming, and we always talk about the pipeline with Tesla and what's coming next. And I think that's a lot what's driving this move. The combination of maybe the trough in EVs is over and subsiding and swinging back up, and this robotaxi that some people feel could be more than half their revenue going forward. What do you see in terms of, should we be watching? What data should our viewers and us, frankly, be watching? Should we watch Tesla versus autos, or Tesla versus AI companies? Where do we put Tesla? I don't know if it's right to have them with autos.
I completely agree. I think for now we have them with autos because for now that is the main driver of its revenue. And I think in the future, though, we will need to increasingly consider other avenues. Tesla has shown off its...
There we go. Excellent point there. I'll give her credit there. I don't want it to be a total bashing video. Yes, right now, and remember, these revenue things are going to swing over time. So you're going to have, right now, it's the bulk of the car company. It's not like everybody thinks that all of a sudden next year it's going to be, all robotaxi, all FSD, and, cars are just going to be this minor little thing over here, or all energy, whatever you want to do that. The reality is that flipped, and it's going to slowly do this gradually over the course of years, guys, maybe even decades before we see the flip the other way. or at least a decade, until we see that flip the other way. Now, obviously, we all stand to benefit if it goes faster. But in the meantime, you can't just compare it to pure tech right now, because I can just look at the margins on a Meta versus Tesla. They're not even close. They're not even in the ballpark in regards to that. And it'll take Tesla, may not ever be able to get there, because, obviously when you talk about, Tesla bot and other things like that, obviously the vehicles, even the robotaxi network, it's all hardware. That all requires a lot of capital, and it just hurts those margins. They're not ever going to be able to have a pure margin like a Meta would. So when you kind of get into those type arguments there, yes, I agree. It's going to be some sort of a hybrid multiple there, but we're so quick to try to give it a tech multiple. And it's going to take time in order for us to get there, guys. And it's going to take years in order for us to get there. It'll get there one day. But a lot of times that's a mistake that a lot of Tesla investors make. They talk about, oh, that's the future. And it's just like, okay, Wall Street's not going to give it to you 5 years in advance. Wall Street's not going to give it to you 3 years in advance. Wall Street's probably not going to give it to you 2 years in advance. And all the folks who bought in 2021 thinking that, well, even if Wall Street doesn't want to give it to them 2 years in advance, it'll be here in 2 years. Well, we're 4 years or 3 years past that timeline right now. And clearly we are still back on square one in regards to this. So just kind of keep that in mind, but it is an excellent point by her in regards to understanding how that should work obviously I don't think she gives us timelines here, but how it should work and how we should be viewing it from a valuation perspective.
Robot, it's Optimus robot, and not only is that driving scale, it's also driving efficiency. And then it's robotaxi, as you mentioned. We see a tremendous tailwind in autonomous driving and what the monetization could mean for wide-scale adoption of robotaxis. And we do see this as something that will be increasingly adopted. Whenever we look at consumer mentions or consumer searches, we do see rising interest in full self-driving, rising interest in robotaxis and in some of these services. So I think that there is plenty of runway for growth. There's still a lot of just making sure that consumers feel comfortable in a driverless robotaxi. That's kind of an initial hurdle that many consumers will have to get over. But we do think...
All right, that's not the initial hurdle. The initial hurdle is going to be it actually working. That's the first initial hurdle. And working in regards to it's all the way there. Second piece will be regulation, all the other things that are going to come along with that, all the other fights, the approvals in all the different counties across obviously just here in the US and then across the world. That all just takes time. Those are the initial hurdles. Then getting folks comfortable with sitting in a driverless vehicle, that to me is almost generational, at least here in the US in regards to what I actually see out there in the real world. So we'll see how all that sort of plays out. So there's more than just that goes on in regards to that.
Tesla is the leader here, and we expect this to be a major driver of growth moving forward.
Yeah, I think one of the big things is, the catalysts that we've had, those delivery numbers weren't as bad as the street had anticipated. You've got earnings coming up in a week and a half or so. The robo event got pushed back, even though they're not canceling it or anything. But I think the market took it that way, down nearly 8.5%, based on the fact that it had rallied so much into that. But when you look at the robo taxis, I think that and the energy storage, the robo taxi, if they get to license that type of technology to the other companies, the OEMs, and anybody else that wants to use it, is that the biggest thing that Tesla investors have to look forward to? And are you guys still buyers here after a 26% jump in July?
We certainly like this name more on dips. Whenever an opportunity presents like the one did yesterday, I think that that's a really nice opportunity that long-term buyers could take advantage of. And we do see this robo-taxi event. We think that this is a major catalyst for Tesla, a major opportunity if the company can execute. And so far for us, Texas.
That right there is the tricky part. Notice the way she worded it. It's a catalyst for the stock. The robo-taxi event is a catalyst for the stock. It is not. Robo-taxi, whenever it's approved, out there, generating revenue, bottom line profits, starts to gain an adoption, all that sort of stuff. That is when it's a catalyst for the stock. Or even when Elon gives us guidance to it. We'll go back one step further. We'll say when Elon guides and says, hey, this is what we expect revenue-wise this year. This is what we expect bottom line profits this year from robo-taxi. That is when it's a catalyst for a stock. The event itself is not a catalyst for a stock, guys. I'm sorry. Battery Day was not a catalyst for the stock. Any other autonomous days were not catalysts for the stock. The, whatever you want to call it, Tesla bot event, I forgot what they called it, or actually they talked about it on earnings first, That's not a catalyst for the stock. None of those things are catalysts for the stock. Those are things that get us excited about things that are coming, but until Elon is willing to give actual guidance towards it, it's not a catalyst for a stock. So we got to keep that in mind. That right there is where kind of the wording, and the reason why sometimes bulls make me upset is because that right there gets people all excited about the event, and it makes Tesla investors think, oh my gosh, that's a catalyst for a stock. I need to buy right now. Despite the fact these same folks weren't telling you to buy back when it was at 170, 160, 140. You know, they were on here, ooh, we got some headwinds ahead. This is happening, that's happening. And then now magically something that's not a catalyst is a catalyst. Please buy at these highs. We'll talk more at the end about why they do that and what it actually means.
Tesla has proven that it can execute. It typically surprises people, and this is just a name that for us, are we willing to bet against a leader like Musk also, who can land rocket ships on a stage? That's not a position that we're going to take. This is a name that we're betting on long term.
All right, great stuff, great data as always, Megan. Have a great weekend.
Thanks, guys.
All right, so we'll go ahead and stop the video right there. Again, she ended with more of those bull points and catalysts that aren't catalysts. Just simply because you think the valuation is extremely rich and you don't want to overpay for Tesla stock does not mean you are not bullish on Tesla stock, does not mean you are betting against Elon Musk or anything else like that. Please, please, please keep that in mind. I couldn't tell you how many times I get accused of being a bear and I don't like Tesla or whatever the case is because I say, hey, $400 and 1,000 PE is stupid to pay for Tesla at the time. That was what I was saying. Not anything, I don't think Elon Musk can deliver on these things. Not that I don't think Tesla won't get there one day. Not that I don't think all the great things that are coming are not going to come or anything else like that. Just simply, you're way overpaying for the stock. Same thing right now. Same reason why people were bailing on Tesla stock whenever it was stupid cheap. It kind of seems like we run the same rinse repeat cycle with Tesla, and it's kind of the exaggeration of how Wall Street manipulates us with things like this. I know that bottom line, traders are going to trade it as far as they can stretch the trade, right? And then they're going to beat it down as far as they can beat it down and continue that trade down. My job as an investor is just to understand and identify when it's overvalued or undervalued. Now, I'm not buying this rally right now, and I don't have to, more importantly, because I bought based on valuation. I bought at 169. I bought at 141. Others of you guys bought in those ranges too. Some of you guys caught the bottom right there at 138 this time around because I wasn't worried about what the narrative was. I wasn't worried, is it going to go down to 120 or not? I didn't freaking care. I just knew that I liked the price based upon valuation, and I bought. And over time, Tesla has given us times where it has run up close to $300 like it did last year. And then we get times just, 6-8 months later where you're able to buy it at half that price. That's kind of how Tesla moves. And when you understand Wall Street comes on here, when it's on a rally, when it's on a run, and they give you all these bullish points, if I can't tie it back to actual earnings, I know, man, this is going to come back. I know when Tesla's trading at a forward PE of over 100, man, these earnings really need to come through with some really good EPS numbers, or else it's going to trade down because now the valuation, like let's just say the EPS is flat. Well, now we're sitting on a valuation of 100 plus with the robo-taxi event coming up, which means Wall Street may continue to push it into that event. I understand it slid out further to October, but nonetheless, they may push it into the next earnings. And at that stage, we could be looking at Tesla at a, 180 PE, maybe a 200 PE. I mean, that'd be great, of course, in terms of how your portfolio looks, but in regards to being significantly overvalued, boy, at some point in time, valuation is going to kick back in and you're going to take a beat down of some sort in this stock, and there's going to be a lot of folks foaming in the meantime, and that's why retail routinely buys high and sells low. It's the same game over and over and over again. So although I don't disagree in regards to where I think Tesla's going long-term with this lady at all, she provided us absolutely not a single point and any valid data that pointed towards the reason for this rally or the reason behind why this rally should continue and justify why it's trading at a forward multiple of over 100. And I'm not talking about valuing it back like an automaker to where it should trade at a forward multiple of like 3. No, absolutely Tesla commands a far better multiple than that. But 100 is just as ridiculous or almost as ridiculous as trying to say it should trade at a 10 or a 12 or a 3 or whatever the case is like that. Both of those multiples are ridiculous at this stage for this stock. And guess what? Wall Street feels the same exact way, and it's going to beat it back down to a much more reasonable multiple at some point in time. But I highlight this just so that way you guys can see exactly the games that Wall Street's playing, even the bulls are playing, in regards to these stocks and in regards to what they're doing with these particular stocks as they run. And remember, if you want to see all my buys on Tesla in real time, you want to be able to talk directly with me about, hey, what is the right valuation for Tesla? Why do you have it where you have it and everything else? And you want to take 5 courses for free, get your free coaching, use our stock analyzer tool, be a part of the best 6, 7, and 8 figure Discord. Just make sure you check out the pinned comment down there, guys. See everything that's involved with the group and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.